Hi folks, and welcome back to Meaningful Money. I'm still here just outside the little village of Treen, far west Cornwall in the UK. Penberth Cove down there, just enjoying this fantastic sort of early spring weather. It's the end of March 2012 and it's warm, it's beautiful. Going to carry on talking about income tax and how it works. We explained a little bit last time, but there's a couple of weird anomalies with income tax which bear explaining in more depth, and the best way to do that is with examples, as I'm sure you'll find. This is sort of an update to a video that I did yonks ago, back in episode 62 or 3, something like that. Worth bringing up to date with the new rates and the new income tax bans and things like that. So before we get into the detail, my friends down here in the bottom right, 7 Investment Management, who are a firm of investment managers in London who continue to sponsor me here on Meaningful Money, and I'm very grateful to them for doing so. Now, little itch there. I'm going to scooch across actually right from the start and bring in the graphic, because you remember last time we were talking about bands. So this is like a ladder of income tax bands, and you are charged a different rate of income tax at different points on the ladder. So the first bit is the personal allowance, £8,105, and that is a nil rate band. So that's your personal allowance. You can earn that much without paying any tax at all. Then you've got the savings rate, which is a funny little thing, which I'm going to explain in more detail in a minute. That's 10%. You've got the basic rate band, which is at 20%, the high rate band at 40%, and then the top rate, or the additional rate band, all the way up at £150,000 worth of income or more, and that's charged at 50%, all fairly hefty. But I want to explain two things, and the first of them is this savings rate band, which only applies if you have interest on savings, money in the bank, which falls into that particular band. It's the first £2,710 on top of the personal allowance. So let's use Jack as an example. Jack is age 62 for no other reason because I made him that, and that will give him a personal allowance of £8,105 for the 2012-13 tax year. Now he works at B&Q and earns £10,000 exactly gross per year, and so that's the first part of his income. Remember, your income is stacked in blocks: earned income first, then savings, then dividends, and then other stuff like property, rental income, stuff like that. So his £10,000 B&Q earnings get sort of stacked against the ladder first, and you can see that uses up all of his personal allowance and a little bit of the next band up. Now, because that is earnings and not savings, anything excess in the personal allowance is charged at 20%. That's in the basic rate band now, because that starting rate of 10% only applies to interest. But Jack also has enough money in the bank so that he gets £1,000 a year in interest gross, and that is added on top of his earned income. And you'll see that that straddles two bands. It straddles the starting rate band, the savings rate band, and then it goes over that into the full 20% band as well. So Jack has a sort of slightly funny thing. He gets a chunk of his income tax free, and then a little bit at 20%. Then his savings is put on top of that, and part of that is charged at 10% and part at 20%. Now if I just wipe those figures off and give Jack an income of £11,000, you'll see that his earned income from B&Q takes him all the way through his personal allowance and through the starting rate band. And if I then add his interest on top of that, you can see that because that interest doesn't fall into that 10% band, it's all charged at 20%. So you only get the benefit of that 10% rate if, when your income is stacked together, you have interest which falls in that band. I hope that clarifies that. It doesn't apply to that many people, but it does apply to some. Of course, if you have no income at all, then savings, it will be the first block, and it would almost all, in Jack's case, it would all fall in his personal allowance, so he would be a non-taxpayer. So I hope that makes sense. You only get the benefit of that 10% band if you have interest income, savings income, which falls in that band. So that's the first weird little anomaly that I wanted to explain. And the other one is that it is possible to lose your personal allowance. Now, the personal allowance is taken away from you by £1 for every £2 you earn in excess of £100,000 per year. So let's look at Sally. Okay, Sally earns £110,000 per year. Now, because that is £10,000 in excess of 100,000, then half of that amount is taken off her personal allowance. So 5,000, her personal allowance is reduced by £5,000. So her personal allowance now, instead of being 8,105, is 3,105. Simply means more of her income is taxed. But that's how it officially works. Your personal allowance is taken away from you by £1 for every £2 you earn in excess of 100,000 per year. That simply means that anybody earning more than £116,210 in a year will have no personal allowance at all. The bands effectively reduce, everything drops down, and so more of the income falls into tax because that tax-free bit at the bottom is reduced. So I hope that makes sense as well, because it's easy to say, you know, the income above such and such up to 150,000 is taxed at 40%. That's true, but that's taxable income, and so it all starts with the personal allowance. And if you've got more than 100,000 a year in income, your personal allowance is reduced. So leave any questions, and if that sparks any questions or any sort of what sort of moments, then try and leave a question under the video here or Facebook on the website or wherever, and I'll do my best to answer it. But hopefully those two examples make sense. Now, there's more anomalies. Income tax is never straightforward. Now I'm going to next time talk about the age allowance, something which is fairly controversial in the budget last week, and so I'm going to cover how that works and what the changes are going to be in coming years, which has got our pensioners all up in arms. So thanks for watching this one, and I'll see you next time.